Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are today's top stories. The peso weakens to a fresh low against the US dollar, even plunging to a record low in intraday trading.
The issue on the extension of the work-from-home setup for BPO firms drags on, with the Fiscal Incentives Review Board saying PEZA's decision to extend remote work arrangements lacks any legal basis.
The country's manufacturing output expands for a seventh straight month in August, reflecting an improvement in operating conditions across the factory sector.
And you may soon be able to edit your published tweets, but only if you are willing to pay for it. We begin our broadcast with the peso shedding further and even touching a record low against the dollar in intraday trading. The local currency depreciated by 27 centavos to close at 56.42 against the greenback on September 1st, its weakest in nearly 6 weeks. Now, at one point of the forex trading, the peso dropped to a record low of 56.45. The peso remains weak even as the Bangko Sentral has so far raised its benchmark interest rates by 175 basis points since May. Now, economists said the peso's prolonged weakness can be attributed to the dollar's continued strength. This comes after the U.S. Federal Reserve Chairman Jerome Powell signaled that the Fed would continue to hike interest rates to curb soaring prices.
The Fiscal Incentives Review Board, or FIRB, says PEZA's decision to extend work-from-home arrangements for the IT and business processing management sector has no legal basis. Recall that last week, PEZA OIC Tereso Panga said the work-from-home extension until March 2023 has been, quote, approved in principle, pending further clarification from the DOF and the Board of Investments. But in a position paper, FIRB Secretariat Head and Finance Assistant Secretary Juvie Danofrata said this lacks legal basis, citing the current resolution, which only allows work-from-home arrangements until September 12. Danofrata adds that the CREATE Act, as well as existing FIRB resolutions, do not give investment promotion agencies like PEZA the power to unilaterally approve work-from-home arrangements. FIRB's position paper has been submitted to Finance Secretary Ben Jokno. We're just days away from the expiration of the 70-30 work-from-home setup. Where does the BPO sector stand now, as agencies concerned seem to be butting heads on whether or not the policy stays? To discuss that, we have on the show Jack Madrid, President and CEO of the IT and Business Process Association of the Philippines, or IBPAP. Jack, good day. Thank you for joining us.
Good morning, Danie and Jess. Always a pleasure to be here.
So where do you stand now in this whole back and forth between PEZA and the FIRB regarding the extension of the work-from-home setup? What's the real score based on what has been communicated to you?
Well, we remain quite confident that PEZA's move towards the extension, longer-term extension of the letters of authority that have been extended to 478 of our RBEs will prevail. I just want to remind everyone that, we feel that this is a permissible activity, well within PEZA law. In fact, PEZA has been issuing such letters of authority since 2017, well before CREATE and well before, the pandemic. So this is really nothing new. It is within the jurisdiction of PEZA to issue such letters of authority.
Okay. Now, sir, the FIRB has mentioned that it is working with the BOI to come up with work-from-home options for the BPOs. Have they actually reached out to you specifically? And what recommendations are you asking for? Are you just asking for the 70-30 to stay, to be extended, or more flexible options? What is on stake here?
Yeah, well, we feel that our investors, both existing and prospective, will always want additional flexibility. We just came from a pandemic, which is not quite over yet, wherein we had to migrate and mobilize, over 1 million employees from on-site to work from home arrangements, which is quite unprecedented unprecedented, right? So this dramatic change in workplace arrangements will take a while before we resume to whatever this next what normalcy, the new normalcy will look like. There is no magic number, and in fact, if I were to hazard a guess, we would prefer an even bigger leeway for flexibility. In terms of the BOI, my own opinion is that all investment promotion agencies should have uniform incentives. I think that is what is more clear and palatable to our investors. And I think that the other differences should be the ones that should differentiate one IPA from the next. But in terms of incentives, I believe they should be uniform.
But sir, we did have representatives from CCAP before in the show during this entire process, and what they were saying was that they do want to go back to the normal arrangements, at least at that point. This was months ago, and they just needed some time for that to happen because, like you mentioned, they needed to, there's still this hybrid kind of work, but it's not as if they did not want to go back. Has that now changed? And you are saying that the nature of the industry has changed, and we need to find a different kind of solutions and still receive some incentives.
No, what CCAP shared is certainly valid. I don't think the thing is though, the IT BPM industry has evolved and matured into more complex and diversified sets of verticals. Certainly on the contact center side, which is still the dominant category and sector of our industry, there is more flexibility and I guess need for probably a higher ratio of on-site operations.
Okay.
But our other verticals will need more flexibility. There are natures of work and services that our employees deliver that can be perfectly performed, in a location-independent setting, and the performance of that nature of work was admired by the whole world during the 2 years wherein we did not suffer any dips in productivity or customer satisfaction in delivering work across all the different time zones where our customers are located.
But Jack, give us a better picture here of what really is the situation like on the ground now. I mean, our majority of BPOs, especially those in Ecozone, still implementing that 70 to 30 work from home setup. I mean, we're just days away from September 12, from the expiration of that policy. Are you ready as well for the possibility that it might actually not get extended?
Well, we are always ready, and we have proven our resilience during these back and forth, and this, I really want to go back to the big picture here. I think our industry has proven its resilience and its flexibility. All we want, because we are launching our roadmap for the next 6 years. This will serve as industry blueprint for our goals and metrics, and the potential of adding over 1 million jobs for Filipinos is the central message. And the reception that we have received from all our government partners has been extremely positive. So we remain confident that we will get the flexibility that our investors, and even more importantly, our employees, who are the bedrock of our industry, are all seeking. So the next few days are going to be very interesting, and we are in active dialogue with all our partners in ensuring that we will be able to retain our strong position and continue to grow in the next 6 years.
Sir, can you say already now, based on the situation, that the cost savings from, let's say, the rentals, or just general productivity boost from having these work from home arrangements compensate for the foregoing of the tax perks? And is this going to be, Concentrix has already done this. Is this going to be something that you're expecting will be a trend or something that other companies are going to start looking into?
That's a complex question, Danie, and I think it's going to vary depending on the company, depending on the category. But to your point on real estate, and we have had dialogue with our real estate partners as well. We remain the biggest absorber and user of office space, and to my mind, the termination of leases has been quite minimal, surprisingly.
Okay.
Most real estate players continue to retain their space in and out of economic zones. So, we feel that the big picture really is improving the reputation of the country in the ease of doing business, making this a more investor-friendly environment, because we are a world capital in the IT BPM space. And along with India, we are the only countries that dominate. And I think my concern is not really the industry losing investors as much as it is maximizing the market share that I feel the Philippines deserves. We are a world leader, and our industry, how many industries can we name where the Philippines is in the major league? This is one of them. We are an indispensable pillar of the economy. $29.5 billion in revenue 2021, adding 145,000 new jobs during the height of the pandemic, despite the overhang of uncertainty, the back and forth about work from home or return to work. Despite that, we have prevailed, but we did not quite maximize. Despite the impressive performance in 2021, our growth rates in the Philippines actually lagged a little bit behind the global growth. So we left a few thousand jobs on the table, and I think this regulatory uncertainty is the primary reason for that.
Okay, but is that market advantage, like what you mentioned, under threat here? The last time we talked, you did mention that there are some emerging markets here, the likes of Egypt, Malaysia, and Poland. And what would at least the extension of a work-from-home setup do in terms of making the Philippines a more competitive BPO market?
Yeah, there's many factors involved in our investors deciding where to locate or where to expand. And certainly it is no longer India and the Philippines anymore. As you said, Jess, it's Egypt, it's Poland, it's Malaysia, it's South Africa. But they are far smaller and are unable to scale. Their population demographics are very different from ours. And I think we're really at a seminal point in our industry, in the global industry. We are in the midst of this war for talent, and I think we have this window wherein we can achieve this ambitious target of 1 million jobs. And I think that we have delivered that message quite forcefully across all the different discussions we've had with the government. And so I really wish we could get past this back and forth, this very intermittent delay in because we want to do what we do best, which is delivering services to our global customers, and not get caught up with lawyers on the legalities of whether we can work from home or not. That is very damaging to the image of the Philippines as a place where it is easy to do business.
Where are we now on that target, sir, of 1 million or 1.1 million jobs?
Well, we got off to a very good start in 2022 on a very similar trajectory. We're hopeful that the second half will yield a similar trend. But I can say that we will find ourselves between 5 to 8% growth in full-time headcount for 2022.
All right, so looking at that to absorb, of course, more employment and upskilling as well of our workers. Thank you so much, Jack Madrid, President and CEO of the IT and Business Process Association of the Philippines.
Always a pleasure. Thank you very much.
Now let's pause for a quick break, but coming right up after that. FIRB broadband provider is said to be considering selling a part of its infrastructure platform for up to $1 billion.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Businessworld live here on One News. I'm Jess De Los Santos.
And I'm Danie, Laurel. Now, the country's manufacturing sector continued to expand for a 7th straight month in August.
S&P Global says this comes on the back of production stabilizing with a softer contraction in new orders. The country's Manufacturing Purchasing Managers Index, or PMI, stood at 51.2 in August, an improvement from the 6-month low of 50.8 in July. Though this shows manufacturing growth for the 7th month, S&P Global notes that the uptick was lower than the average.
Now, still, the research firm says the August PMI data signals an improvement in operating conditions across the manufacturing sector. Among its Southeast Asian neighbors, the Philippines' PMI reading was in the middle of the pack, lagging behind Thailand and Indonesia, but better than Malaysia and Myanmar.
The Bangko Sentral raises the minimum capital requirement for rural banks to 50 million pesos. The increase in minimum capitalization under BSP Circular 1151 is part of the Rural Bank Strengthening Program. Rural banks with up to 5 branches now need a minimum capital of 50 million pesos instead of the previous 10 million pesos. Banks with 6 to 10 branches are required a minimum capital of 120 million pesos, while those with more than 10 branches should have a capital of at least 200 million pesos. Rural lenders are given 5 years to comply with the new rules.
President Bongbong Marcos vows to improve working conditions of Filipino nurses. Now, during the Philippine Nurses Association, or PNA's 100th anniversary, President Marcos admitted that health workers in the country, especially nurses, are not compensated appropriately for their work. This despite the benefits provided by the government during the pandemic, such as hazard duty pay, special risk allowance, COVID-19 sickness, and death compensation. The president backs the passage of a bill that seeks to provide equal pay for nurses in both public and private hospitals. According to data from the PNA, nurses in private hospitals receive less than half of the entry-level salary in public hospitals.
We seek to address the disparity in salaries between nurses in government hospitals with those in the private sector. Also, we must address the uneven distribution of nurses in different areas around the country.
Bloomberg reports that Converge ICT Solutions is considering selling a stake in its infrastructure platform, a move that would help the FIRB provider raise cash for investments. Citing people familiar with the matter, Bloomberg says Converge has been holding talks with prospective advisors as it weighs a deal that would bring a minority investor into the network's platform. The transaction could reportedly help the firm raise about $1 billion or some 56 billion pesos, depending on the final size and structure. Reports say there are no final decisions yet on the matter, as considerations are currently at a preliminary stage, which means Converge could still decide against pursuing a deal.
Have you ever had a hit tweet with a typo on it? You may soon be able to tweak your published tweets, but only if you're willing to pay. Twitter is finally rolling out the long-requested edit button, which will be available to paid subscribers later this month. Users who pay $5 for Twitter Blue will soon be able to edit their tweets a few times within 30 minutes after hitting send. Edited tweets will have an icon and timestamp to display when the post was last edited. When asked if the edit button will eventually be made available to all users, a spokesman from Twitter says they are still testing to see what might happen if it is made a default feature.
Getting more and more costly to make those mistakes on Twitter.
I don't even really use Twitter, Jess, but anyway.
Well, those are the biggest stories on the economic and corporate front today. I'm Jess De Los Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local boards when Businessworld Live returns. Stay with us.
And you're still watching Businessworld live here on One News. Now, Dan, markets have traded sideways this shortened trading week, just reflecting global equity rout. How is the sentiment this Friday?
A little bit better, but not to say that, of course, we're not necessarily back to those 6,700 levels we had enjoyed prior. But you can see, getting over the hump here. And like you mentioned, trading sideways, just swinging between gains and losses in these 4 days of this week. Now, let's take a quick peek, Jess, with the big story of yesterday. And that is, of course, ABS-CBN and MediaQuest, which owns TV5's deal, off the table. You could see ABS continuing with the pain. That's down by 2%. Yesterday already, it was already down by 12%. But we can take a look at another rival here, which is, of course, GMA, which is continuing on that uptrend. That's this bump up right here. It's up by 2.8% after already having jumped 7% yesterday. And I did want to take a quick peek at Converge on the back of that possible sale, weighing $1 billion possible network deal for a minority investor. And if you take a look here how Converge is doing, it's the second best performer today, up by 2.7%. Now, luckily, Jess, we do have with us Luis Lumingan of Regina Capital to weigh in on what's going on. Hi, Luis.
Hi, good morning to you both. Thank you for having me again.
Luis, very good to have you here, especially on this issue of MediaQuest and ABS-CBN terminating this investment deal. Is there going to be a longer-term impact on the stock? How much value could this deal have added to the ABS-CBN stock, both fundamentally and forward-looking?
Well, we didn't get that much of a glimpse as to what was going to be in store for both networks. And I think when we were talking about the deal, I was mentioning that it would have been more beneficial probably for Sky Cable, given that their subscriber base is around 300,000 versus Signal, which is I think 3.5 million. But again, I think with everything said and done, the speculators, you can see since yesterday have been exiting and they're going back into GMA. Probably, it's very hard to say what's going to happen in the long term. Medium term, I'd say that the stock price is just going to retrace back to where it was before even the deal was announced. So it's just going to be status quo for now.
What is the future going to look like now for ABS-CBN, especially in terms of recovering those losses?
Well, I think it was expressed previously that they would see an earlier return to profitability. That's, I guess, now forecasts are just going to be as they were prior to the deal. Now, again, if they can find other ways just to bring the programs, the quality programs, and make them more available to all the viewers, I think that's going to solve it. But for now, again, everything I guess is just going to go back the way it was originally.
Luis, you mentioned that investors suddenly shifted towards GMA rival. Is this, just sentiment driven, or is this failed deal, so to speak, something that might bring other media companies to light?
Well, I think speculators are very short term. So basically, I think the exit was just in reaction to the deal. Maybe, well, you brought up a very interesting point that it might there might be focus on other media outlets, but I think right now it's just shifting back to GMA since again they're going to remain the dominant player in the market. But probably down the line, maybe there could be other players that that might be of focus. But I think for now, this is what's going to be happening on the short term.
But zooming out, what do you think will this latest developments impact be in terms of companies at least looking to do M&As and foreign investors? Is this going to add jitters to the market regarding an uncertain political environment, or is it just like any other investment deal which in turn failed?
Well, I think this is an isolated case, given that one, it's more complicated if it's media, because again, you have to, and I'm not a legal expert here, but of course, I think the terms that they were citing was because of what's getting a legal franchise in Congress, and that it has to pass through SUPS. But it's not like other businesses where I think the requirements are much more different. Whether it's banking, whether it's power, for example. So it's really case to case and dependent really on the industry.
Okay. Now, notwithstanding this as having possibly moved, the markets this week, where is the bourse gonna go, Luis? Tell us, now that Jackson Hole has happened already, we've had comments from the BSP Gov, there's even a pronouncement on the August inflation already. Have all of these been priced in? And what direction are we really looking at here?
Well, I think it hasn't been exactly priced in, especially and just to backtrack a bit, the market was already recovering generally, not just the Philippines, but globally as well. Of course, with the statement of Powell and Jackson Hole, everyone is just already changing their assumptions moving forward that the Fed is going to be hawkish in the long term. I think they're basically just saying that one data point where they saw that inflation softened is not enough for them to change their stance. Whereas the market was already factoring in that they would be doing so. Now, I think the Fed is also just trying to be safe, and they don't want to preempt anything. But we have seen, at least at the data, given that there was a sell-off in the U.S. for the last few days, except for yesterday, where again the economic data was saying that the market or the economy is recovering at least, or has stabilized. And of course, we've seen that oil is already weakening. Is it going to be a trend? We don't know, because we know that the Western economies are trying to strike a deal with Iran, for example. They're also looking at, I think, in terms of natural gas with Qatar. Now, is Saudi is OPEC Plus going to retaliate and say that, well, if that's the case, we're going to decrease production so that the price of oil will be pushed up. Second, it's also the winter season is already approaching. So what's going to be happening then? Is it going to be a much harder winter where they have to ask for more supply than was already given? So many things can happen in the short term, and that's why I think the Fed is just keeping its stance for now.
All right, so oil still a possible boogeyman here, as of course the Fed tries to control inflation, and the rest of the equities have to adjust as well to those rising interest rates. Thank you so much, Luis Lumlingan, Head of Sales of Regina Capital.
And that's it for today, September 2, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danie, Laurel. Mask on, wash hands, stay safe, Philippines. We are One News, all sides, all the time.